Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, October 26th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you financial advice. This is for informational purposes only. Please do your own due diligence on any information or ideas presented. It's your money, it's your responsibility. Okay, starting off this week, I wanted to talk a little bit about the debt and deficits. There was an interesting segment on CNBC this week with one of the folks that I uh, admire their opinion, and that's Paul Tudor Jones. And he was talking about the debts and the deficits and how they're inflationary and what that means longer term. And that's something that we've talked about on this channel for a while. And saw it, we are seeing it manifest now in the markets. I think Luke Gromen actually described basically what the Treasury's doing is running the world's most powerful, biggest, baddest hegemon in the world history, basically on payday loans, on short-term treasuries, rolling those over. So maybe a little tongue in cheek. But there was a lot of discussion around what caused the inflation that we went through over the last several years. And as you know, I subscribe to the Milton Friedman view that inflation is always and everywhere a monetary phenomenon. A lot of people, I think, that have a different view or a view opposed to that, they look at rising prices as inflation. Rising prices are a manifestation or a consequence of the actual inflation that's created. Inflation is created by the government and the central bank by creating currency units far in excess of what the productive capacity of the economy is. So MIT did a study on this, Sloan School of Business, and I'll put a link to the article. And what they determined was that federal spending was responsible for the 2022 spike in inflation. So here's a few snippets from the article. In attempting to understand the 2022 spike in inflation that followed the pandemic, some policymakers, up to and including President Joe Biden, blame shortages in the supply chain, but a new study shows that federal spending was the cause, significantly so. There's a quote here from the senior lecturer, Mark Kritzman, quote, "Our research shows mathematically that the overwhelming driver of that burst of inflation in 2022 was federal spending, not the supply chain." It goes on to say, the narrative at the time was that the cause of inflation was interruptions to the supply chain because of COVID-19. But that didn't show up in producer prices. In other words, if supplies became scarce, then the price of those supplies would go up, which we don't see in our results at that point in time. And so I think that this is further evidence that if you print money and give it to people, they're going to spend it, and that's going to raise prices. Again, people will argue with me and say, well, we had decades where there was no inflation and we had higher deficits. The deficit or the debt has increased, by $20 trillion dollars basically over the last 25 years, something like that. And how come we didn't have massive inflation? Well, we did. We had a lot of inflation in asset prices. If you look at the equity markets over the last couple decades, you'll note that. But that's, all very interesting to discuss, and people have their own views and biases. But, this is what MIT is saying. That doesn't necessarily mean they're correct. I do believe there was some supply chain issues, but they're saying that their data doesn't show that, at least in that particular point in time, is what they're saying. So I think that, you know, as I talked about in last month's newsletter, or in the last couple of months, I can't remember, in the paid newsletter, I discussed theories around why we have left a disinflationary or a low inflation environment and a low interest rate environment that was present over the last several decades and led to a lot of asset price increases in the United States, in particular the equity market. Now, a lot of people will say, well, that's because of the technological lead of the U.S., because the U.S. is so, the legal system, and a lot of other things. I would say that those things are true, but a lot of it had to do with one-time major events that are now reversing or likely not to continue, i.e., the Chinese labor arbitrage that happened when they became the manufacturing center of the world, the decline of the Soviet Union and how they dumped commodities on the market um, to raise cash at the end of the Soviet times. And obviously, uh, monetary policy was able to be able to cut rates in that environment. It was disinflation. We had a disinflationary environment. We didn't have inflation because we had periods of tremendous amounts of commodity disinflation and labor uh, arbitrage by China. They didn't have a big supply of commodities to dump on the market, but they had 1.4 billion people, and they could have them work in factories for very cheap wages. And you saw what happened, how that decimated the developed world's middle classes, manufacturing, uh, basically aided and abetted by a upper class, a leadership class, particularly in the U.S., that hollowed out the manufacturing sector, moved everything overseas or allowed it to be. So I think that we're in a situation now in our history in the U.S. where, again, nobody in either party is talking about fiscal restraint. No one is talking about the debt. I think former President Trump mentioned it on Joe Rogan's podcast the other day that he had intended to start paying down the debt. I don't believe that, but it's not just like what one man wants to do as the president. I mean, this is the thing. This is the kind of the caricature, the cartoon version that, we pick these particular leaders, whether we think they're good or bad, and we think that they have like they're Sauron or something, and they control every gear and every lever and every dial in these governments. I mean, these people are basically figureheads that, give an order to steer the ship either left or right, and then there's thousands and thousands of people below there with their own agendas doing their own thing. So, uh, the point I'm trying to make is that we have now systemic issues that are built in, i.e., around entitlements, um, around this addiction now to deficit spending, such that if you were to cut it back massively, the economy would basically go into a massive recession, a disinflationary collapse because of all the debt. Now, people want to argue with me about that. That's fine. You can do that. But we know the outcome of what's going to happen. Okay, I go back to the Paul Tudor Jones interview on CNBC. He's saying it. Stanley Druckenmiller's saying it. Ray Dalio saying it. These are all billionaire hedge funds that have said the same thing that I've been saying on this channel for a while, in that there's only one way to get rid of this, to deal with this over indebtedness, and that's through inflation. And that's why I think, just to sum this particular situation up, you can expect higher inflation going forward. You can expect higher interest rates. I had one wag that responded to me in the comments of one of the videos saying that, or even on Substack, that, I was long bond. I never recommended bonds to my subscribers. What we did is we took advantage of the high rates that were available in short-term treasuries because that I did not feel it was time to move into the hard assets. Now that we've had all the central bank liquidity that's increasing, if you've been following, how we've moved from higher cash levels to deploying that cash now into tangible hard assets. I've been very consistent on that. I did think there was a possibility because I was working off the same old playbook, as I've explained before, that I thought that raising rates by 500 basis points as quickly as the Fed did, that would lead to a recession and there would be an opportunity for a trade in longer term bonds, a trade, not investing, a trade, 6 month trade, uh, 6 to 12 month trade. I was wrong on that. Even the best investors are wrong more than 50% of the time. So I've since jettisoned that view. And as I've said before, and as what's in the portfolio is a trend towards things that are going to benefit from higher inflation in the US, tangible assets, looking at emerging markets that should do well as we get higher rates or as we have higher inflation here in the US. So I think that I think we're going to have some problems here going forward. That's only going to be alleviated by printing a lot of money. That's basically what I think is going to happen. So we've talked about this before, and I don't need to keep rehashing it. But I thought this was an interesting article that was published by MIT showing the inflation being exacerbated or caused by excessive government spending. And so you see here this is from the St. Louis Fed, their Fred website of data. This shows the federal debt, total public debt as a percent of gross domestic product. You see that, basically a generation ago at the turn of the century, we were less than 60% of GDP. That was tremendous. And then you saw, the great financial crisis and then, the pandemic. So we've had, basically trillions and trillions, this is also trillions and trillions of dollars added to the debt. A lot of this because of the deficit spending that's went on and also because of the dumb wars that we've had. We've probably spent half the amount of debt that's been added in the last 20 years has been for these stupid colonial overseas wars that we got nothing from. And the only people that benefited were certain people, classes in the United States, the defense industries, uh, other connected uh, entities, the military industrial congressional complex. This is why Mr. Trump is hated so much. He has a lot of imperfections, but he pointed this out. As you remember, after he took after Jeb Bush in the 2016 Republican primary debates, okay, and he lambasted him, and people get this. People are tired of these overseas adventures and spending hundreds and hundreds and billions and trillions of dollars on these foreign adventures that only enrich a certain class or benefit certain constituencies. And it will not be able to continue. You'll either be able to choose to hold on to the hegemon or pay your entitlements. Those are going to be you're going to be stuck with choices here at some point. Very difficult choices. And even if the defense budget doesn't need to be increased, it needs to be cut by 90%. Is anybody talking about that? People would call me a crazy person. What are you getting for it? Okay. Your whole hegemonic, uh, Atlanticist, uh, expedition in Ukraine has been a total bust. The weapon systems that the U.S. spends trillions of dollars on don't seem to work. So, and now you want to start a war with China. Okay. So these people never stop. They have to be stopped. They have to be removed. They have to be excised like cancer. We know who these people are in the government. They slither through administration, and they need to be excised. They need to be exposed for what they are and who they are. So we'll see what happens, but I don't think any of this will happen. I think we'll continue to rack up debt until there's a crisis. And then, that's the worst time to deal with it. The time to deal with a crumbling building is when you can do a controlled demolition and deal with it that way instead of having the thing just fall over into the adjoining buildings. So this is why I'm a big advocate for gold and other hard assets. This is came out from the Incrementum uh, update of gold charts. I just like showing these longer term charts over the last 20 years. You go back to this debt chart and it kind of follows, not exactly, but you get the point, right? And we've had this massive breakout from this. Basically, this is a classic cup and handle over multi years. Gold's going a lot higher. Do I think it goes straight up? No. Is there going to be pullbacks? Yes. Are we going to see, people out there doing like they did in uranium where they're going to swear it off? Yes. But this is now an established bull market. There will be pullbacks, but this will be multi-year in my opinion. So you buy the pullbacks. You don't buy when everybody else is buying. If you don't have an initial position, it will pull back. There will be a pullback as things get overbought, and that's when you should enter your positions. Okay? If you share the same view. But this is classic. This is a classic cup and handle. These are very, very powerful technical formations. And again, unless you think that we're going to get our fiscal house in order, unless you think that we're going to stop doing these foreign wars and spending all this money on defense, even President Trump might want to stop the wars, frivolous wars, but he's still going to spend a bunch. The defense budget's not going to get cut because the lobbies are too big. It's not something that's going to change. The entitlements are locked in, and now you have interest locked in. Okay, so on this debt that you have to pay. So yeah, I'm very bullish on precious metals going forward. And central bank gold buying is one of the main reasons that's driving gold higher. I really love this chart because it's really gives you the view of what's happening over the last 30 years. I remember it says here Great Britain and Switzerland selling gold reserves. This is when this moron that was what was his name? I forget his name now. The guy that was the exchanger of basically the central banker in Great Britain back then. What was the guy's name? He was a politician. He basically that was the bottom when he was selling gold. Okay, that was the bottom. They were selling the UK's gold reserves because gold was a doorstop. It was selling at 240 an ounce, and who cared about it? It was worthless. They had financialized the economies, hold treasury securities and government bonds as reserve assets. And what do you need gold for? That was the bottom. Then we kind of made this transition from the post Great Financial Crisis, where we had central banks adding to gold reserves, and then post Russian invasion of Ukraine, the shot heard around the world by the United States, where they basically uh, told Russia and well, basically tried to isolate Russia from the world financial markets and from the banking and from the SWIFT, and that backfired and didn't work. And so the message was sent to everyone else: if you get on the wrong side of the U.S., they'll try to freeze you out and run all these sanctions on you. So people were like, "Hey, stop buying treasuries and start buying gold." So you've seen this. So this is the one of the main, if not one of the main, if not the main driver currently. I think that more retail buying will come in, more investment buying into gold and precious metals will come back in. At one time gold represented for some central banks 50, 70, 80% of their reserves. I'm not suggesting we're going to go back to that anytime soon, but I think we are heading towards that direction, especially as the United States recedes, its hegemon gets weaker and weaker, and its ability to sanction and force people to do things as the you know inherent contradictions of its economic policies begin to eat away at the foundation of the United States. So, yeah, this is something that I'm very bullish on. Again, gold mining stocks look like they're finally waking up. This was inevitable. It just takes time. As gold moves higher, it's having this ability to move higher than the costs that go into mining the gold, especially with the fact that oil prices really are kind of not have been negative, not negative, but have been weak. That's one of the major input costs into gold mining is the diesel that's required for the mining equipment. and for the other activities on a mine site with lower energy inputs and a higher gold price, this creates margin expansion for the gold companies, a sweet spot, if you will. And I think that the gold stocks will respond to that. You see that there's been a traditional relationship between the gold price and gold mining stocks. Historically, gold mining stocks have returned three times the increase in the gold price. So you would expect that if the gold price advanced 25%, you would expect a typical gold stock or the gold stock averages to advance about 75%. And we just haven't seen that. So there's a lot of room for catch up. And I think it's starting to happen. Money is flowing now into the gold stocks, mostly into the majors. But eventually, I think if the gold price continues to move higher, once it cracks 3,000, when it hits these major numbers, it's going to create a media interest, which will trickle down into the investment community and I think lead to further buying. In addition, very few portfolio people or your local Edward Jones financial advisor are not putting people in gold. They're really still stuck on the last 40 years. They're going to fight the last battle for a long time with their 60/40 portfolio strategies and their targeted investment funds and all these things, targeted retirement funds. You're 28, you're going to retire in 30 years, so we'll put you in a 2050 fund and blah blah blah. And it's skewed between bonds and stocks. And as you get closer to that retirement, it skews more to bonds. That's going to have to go out the window because bonds are going to be net destroyers of capital, negative returns going forward in many cases. So eventually they'll get on board, probably near the end of the bull market. But there will be more interest also as clients see gold moving higher, and we will see it. This is another thing that Incrementum tracks is the amount of uh, funds moving into the investment side or investment advisors recommending gold. It's like less than 1%. So less than 1% of the accounts out there that are being managed by financial advisors have gold exposure. That's going to change over time. If, in fact, my thesis is correct that we're going to have higher inflation over the next several decades. So this is from Tavi Costa. I mean, drawing lines on a chart, this is why I like to show these charts for informational purposes and to bring attention, but anybody can draw a line on a chart any way they want. But regardless, uh, question is are silver miners sticking out? We expect as gold moves higher, silver has moved higher. We expect the mining stocks to move higher. Now, if you thought that the returns in uranium stocks were great at the initial part of the uranium stock bull market, when we were buying uranium stocks for pennies on the dollar, we're kind of not in exactly that stage in gold and silver mining stocks, but we're pretty close. And so there's no bull market like a gold bull market. And there's certainly, you can even put a multiplier on silver stocks. When a silver bull market gets going, the silver stocks can go up easily 20, 50, 100 times. There will be stocks that do that. And so I think it's something to pay attention to and to be thinking about particular stocks that could benefit. Again, I think if we get in a full-blown bull market, which I anticipate we will at some point, right now, as I said earlier, it appears that right now most of the stocks moving higher are the larger ones, but I think again that will trickle down into the mid-range companies and eventually into the juniors, and we'll get a full-blown speculative bubble in these stocks. I wanted to point this out. This is the Canadian Venture Exchange. It looks like it's starting to make a move higher from a long-term, you know, downtrend line breaking out. Again, pretty lines on a chart with crayons doesn't necessarily prove anything, but it's something to watch, right? The Canadian Venture Exchange obviously is an exchange. Toronto Venture Exchange, more precisely, is a stock exchange that has a lot of junior mining, junior oil and gas, a lot of resource-based stocks on it that are very highly speculative. So if this thing's moving higher, it's something to pay attention to. And uh, again, these are just further clues to verify and solidify thinking around what we think is going to happen, which is a move to tangible assets, and eventually a speculative move in a lot of these smaller mining companies. Again, here's this is the Sprott Physical Platinum and Palladium Trust. I will say that in the newsletter we got long platinum. I've been advocating it on the newsletter or in these videos. I think the platinum can do exceptionally well. This has both like 50% platinum and 50% palladium, but it appears to be breaking out, sticking its head above um, a consolidation that went on for over a year. Another thing that can move extremely quickly and higher. Again, palladium and platinum are more industrial based metals. I've been accumulating platinum for some period now, probably over a year. I've been buying physical platinum. Again, you don't have to go into garbage stocks right this second. You can monitor them. I mean, everybody loves Stillwater, Sibiane, Stillwater. I think that's how you pronounce it. Everybody, but people were advocating that stock, I think, over the last 6 months, and it's dropped. So things can drop. So, um, obviously, if we get a move higher in these metals, then a lot of these companies will benefit. But timing is always a um, thing here, and I think that the demand for platinum and palladium is not going to go away. They're extremely more rare than gold. They have their own supply demand dynamics, which people should investigate. But I think that in a world where commodities are going to be moving higher, in a world where, in particular, a lot of the platinum and palladium comes from places that are not necessarily uh, going to be friendly towards the West, i.e., South Africa and Russia. So there's talk of banning palladium, all these crazy talk from the U.S. to try to damage Russia. As I'm going to point out later when I do a short review of the BRICS summit, this is more and more proof that the U.S. just every time that they put sanctions on or try something that doesn't work, it just exposes the futility and the paper tiger aspect of what the West is becoming. And I think this benefits these things longer term. Again, not only all of these geopolitical situations, but just the fact that the underinvestment that's went on for years and years and years. I mean, people are not investing huge amounts of money to expand platinum uh, production in South Africa because it's a horrible place to do business, and it's just not. Uh, if we do get a run, this thing could really move. And again, you don't have to be in a big rush to get a decent return. Just buy the metal. You can just acquire the metal. There's different ways to do it. They sell all the way down to, you can get the refiners in Switzerland down to 1 gram. I mean, you're going to pay a higher premium the smaller the amount you buy. If you just buy like the 1 ounce koalas, I think, or different countries have coinage that they make from their mints. But you can buy 5 gram little. They're not bars. They're just like little squares that are inside of a package, sealed by one of the Swiss refiners. I like those. Those are interesting, and they have a serial number, and uh, they're acknowledged legitimate refining companies that are recognized. So, but you will pay higher the smaller, just like in gold or silver, the smaller the denomination, the higher the premium you'll pay. But I think where these things are going, paying slight premiums isn't really going to be a problem down the line. So, my feelings on China. I'm very bullish on China. The stock market's there. I think that my understanding of it being extremely undervalued relative to its size in the world economy, somewhere around, 20 something, whatever it is as a percentage of world GDP, it's rivaling the US, but yet its stock market has not done anything for years. And mentioned that as being undervalued for the last year, but I was hesitant, to just a lot of people have moved in. We've had the tremendous move upwards, the initial move of a bull market, beginning of a new bull market probably. I was apprehensive in wanting to involve myself too deep into the market just because I saw that the U.S. is having this aggressive stance towards China. But I have been finding ways to play it. There's many ways to skin a cat. You don't necessarily have to buy Chinese equities. Um, I do own some Chinese equities, I think, that are at, like I said, the periphery, Hong Kong stocks that I think that will benefit. Your typical, with all of the Chinese bazooka firing and emphasis on stock buying, you know, that companies can take loans from the Chinese government to buy back stock, things like this. Um, I think that I want to participate, but how can I participate in a way and still protect myself? So I think you have to do it in the equity market, but I think there's ways to do it. I'll be writing about that more in the October issue or the November issue now of the Actionable Intelligence Alert. I'll actually be adding a couple names to the portfolio. One will be a dividend in the dividend portfolio. One will be one or two stocks uh, in the normal AIA portfolio. But I think there's an opportunity here. Well, why? Because I think, when Chinese, am I an advocate in saying, the old model was China would fire a bazooka and you'd buy iron ore, you'd buy oil, you'd buy copper, you'd buy these type of things. But that's not necessarily the case this time, right? I mean, you saw when they fired the bazooka recently, I think BHP or something, these iron ore companies are up like for a day or two. That's not really what's happening in China now. That's not going to work. So I think there's other ways to play this. But one of the things I think is I do take seriously when the CCP says it wants to do something, it usually can make it happen. For example, they wanted to move into nuclear, so they moved into nuclear. They wanted to move into these various industries, solar panels, batteries, EVs, industrial like heavy equipment now. They're starting to dominate some of these industries, okay? When they make a path to do that, they do it. And so my point is, if they want people, I think Chinese citizens or stock ownership in China is only like 10%. So only 10% of the population messes around with stocks or has equity ownership. Okay, that's low. In the US, people have 70% of the people have some type of exposure to the stock market, whether it's individual retirement accounts, 401ks, pension plans, what have you. They have exposure to the equity market or just having regular accounts themselves. And so I think that that's what China wants to see. That's why if you look at some of the initiatives they've made, buying back stock and participating in the equity market a something they want to happen. And so we've seen again, them basically allowing Chinese companies to borrow money to buy back stock. And then what we have seen, we have this tweet here says more than this is from a Chinese paper. The guy just translated it and wrote this blurb here on Twitter. Basically, more than 2,000 China-listed companies have engaged in share buybacks so far this year, with the total value more than double that of the same period in 2023, according to Securities Daily Report Friday. It's a Chinese newspaper. And so we're seeing more of that. We're seeing, anecdotal evidence. I saw that there was a recent, people are reactivating their brokerage accounts, new brokerage signups. These are all positive things that are happening. You know, Basically there's two views on China, right? You have the Kyle Bass and, typical US view of China, Communist Party, real estate bubble that blew up. They're going to go into a depression, over indebtedness. Then you have other people that are actually in China that have been in China for years and have a different view. I was fortunate that I was able to listen to I subscribe to Cuppy's event-driven monitor. It's very expensive, but I subscribe to it. I like the publication. I'm not going to get into it, but basically one of the perks of the publication is monthly they bring on these tremendous speakers to speak directly and people can ask questions. And Cuppy had on yesterday Louis Gove, who I'm a big fan of, and the conversation was around China. And Louis, I mean, he got into a lot of deep conversations about these exact issues, what can benefit. And so I'm more inclined now to be more bullish on China and actually try to participate in what I think is going to be a tremendous um, uh, opportunity. Now, again, I don't want to go out and just be buying all these Chinese equities, even though they are undervalued and they are, doing things that I like Alibaba, Tencent, JD, I mean, Baidu. You can do that. You can buy, KWeb, which is an ETF. But I think there's some other ways to play it, I think, that are even more lucrative that I've found that, again, as Louis Goff said, there's many ways to skin this cat. So, I was fundamentally in my mind thought this was an opportunity, even a year ago, but I just didn't want to go there. Now I think also with I'm less pessimistic on like a Chinese American war than I was uh, maybe 6 months ago. That was one of the reasons I was apprehensive to participate. When you have the CNO basically telling the service, the Navy, to get ready for a war with China by 2027. That's interesting. Now, with the polls showing that um, looks like former President Trump has a very good chance of winning the election, I don't think that you're going to have, yes, there'll be tariffs. He's going to get a deal. I mean, I think that's what he's kind of said, and other people around him said. There's going to be a lot of rhetoric, there's going to be a lot of posturing, but in the end, something's going to get signed because he's a deal maker. And he's not a warmonger. Doesn't want to have a war with China, shooting war. It's not to our benefit. He's a businessman. And so he'll be looking to make a deal. And I think that a deal would get probably done. And, the Chinese don't want to have a war either. They want to make money. And so I think, depending on what happens with the election, I'm not basing this on an election. That would be more of a long-term benefit. But I think you could see a situation where you have the election, Chinese stocks go down just because a lot of people are, misinterpreting, I think, what President Trump's views would be. But I think eventually he would get a deal that would be mutually beneficial for the U.S. and China and really get the tension down. And so a Harris regime, it would just be business as usual. The United States is in no position. They've been fully exposed. We're not going to have a war with China. China's not going to invade Taiwan. I mean, for heaven's sakes, the Germans could invade Great Britain. I mean, they shelved Operation Sea Lion when they were at the height of their power in World War II. They couldn't even cross the English Channel. You're telling me that basically the Chinese are going to have amphibious landings on this rocky island of Taiwan? I mean, it just doesn't make sense. It's not, is the possibility zero that it would happen? No. Is the chance very high? Not likely, in my opinion. So I always reserve the right to change my mind when the facts change or my thinking changes. And so I think that I'm getting a little bit more bullish. Even I think regardless of who wins the election in the U.S., I think you're still going to, just because of the liquidity that's being pumped into the Chinese markets, you're at least going to have, you know, over the next year, I think a decent return from Chinese stocks. But I think there's a possibility you could have a really strong bull market that would be multi-year if the dominoes fall in the right sequence. So I'll be writing more about that in the newsletter next month and adding some issues or adding some more stocks to the portfolio, a couple more or a couple that I think can take advantage of that. So if you're interested, you can subscribe. If you're a subscriber, you can look forward to my views on that as we move forward. And you see from Cross Border Capital, People's Bank of China liquidity injections. You see the liquidity, liquidity. As I've said before, one of the mantras here, as Stan Druckenmiller has taught us, liquidity drives markets. And so you see what's happening. You had a period where basically you were in negative liquidity, a little short jump here in about, a few months ago, and now, stepping on the pedal. So another reason to be bullish, I think, on Chinese stocks. Chinese power consumption. I found this guy on Twitter or X, David Fishman. He basically just this is what he does. He tracks energy use in China, basically saying September 2024 China power consumption update. Chinese power consumption in September 2024 rose 8.5% year over year to 847.5 terawatt hours, an anomalously high number in what is normally a mild month. September 2024 power consumption was 41% higher than in September 2019. A lot of this was due to air conditioner usage, but he has a long thread. You can look him up on X and go through it. I found it interesting. But this view that, again, you have to look at China being kind of like a bifurcated economy too. Yes, they deliberately did some things, I think, to cause their real estate market to struggle. Does that carry over to the banking sector to a certain extent? Probably. How much does it? We don't know. We'll never know. But we do see that they're running basically the Chinese an $80 billion a month trade surplus with the rest of the world because of their now dominance that's starting to develop in basically 90% of your solar panels are made in China. Batteries, are being made in China. EVs are basically taking over the world. Louis Gove talked about one of the models that BYD has. I think it's called I can't remember what it's called now, but it's on a 6 month waiting list. Basically, it's a hybrid that basically goes about 1,300 miles between refueling. So you could basically drive from Vancouver to Los Angeles and fuel and stop once for gas. So, the days of China being known for making, Minkman schnozzes and plastic doggy duty pranks, that's over with. They are high technology. They are taking over industries, like I said, heavy equipment, cars, and I expect that to continue. If they decide they want to get into an industry, they will get into the industry. So I think that opens up a lot of opportunity there in China. And I think, what are they going to do with the $80 billion a month trade surpluses? They're certainly not going to put it all into U.S. treasuries like they used to. That those days are over with, right? So I think people, depending on who you want to listen to and who you want to get for information, you can get a different view. You can again find any view that will, enable your biases or, support the biases that you might already have. I want to strive to know the truth because regardless if I like it or not, I want to try to know what the truth is as best I can, such that, when you're dealing with real money here, that's what we're here to do. We're here to increase wealth over time. And so just saying stuff like, well, the Chinese is a communist country. Yeah, it's about as communist as the US is. Is it centrally planned? Do they have, do they have a government that is different than ours? Yes. The people in China seem to be fine with it. As long as they continue to deliver prosperity to the most of the Chinese people, they will continue to have the support of China. And regardless of what government you live under, the government inevitably has to deliver prosperity, has to deliver a standard of living, or it slowly loses um, um, credibility and eventually goes away. I don't care where it's at. It might take decades, but it's the same thing which happened in the Soviet Union. People just weren't people knew it was all fake. The same thing you have in a situation like Cuba and these places. Eventually the turn will come because people just say that's enough, or you get the right leader and he finally says, okay, I'm going to loosen things up. That's been one of the things that's made me a tremendous amount of money watching some of these countries go from really, really bad to less bad to positive. You saw that in the Republic of Georgia, places like Central Asia that's happening in Uzbekistan. We're seeing, what can Malay do in Argentina. So these are opportunities. And I think, trying to look at things for the way they are, not necessarily our previous biases, will go a long way in helping us to shape an opinion that will make us money. So I put this here, the hegemon is losing its grip. This is the BRICS summit in Kazan, Russia. basically the leaders of 4.8 billion people were represented at the 2024 BRICS Summit in Kazan. I wanted to point this out because you're not going to hear much about this in the Western media because this isn't, what the hegemon wants to talk about. Doesn't want to talk about how more and more people are moving away from the hegemon now that they have an alternative. I'm not necessarily saying this is going to be better. I'm not endorsing any of these governments. I'm not saying, so somebody says, well, if you like it so much, move to Russia or China. I mean, these are infantile responses. This is the way the world is, and we have to, try to understand this because it's not going to stop because you make infantile remarks or, basically retarded, stupid remarks that don't, based on nothing. This is what's happening in the world. So what's actually happening? And so Simplicius the Thinker, somebody I follow on Substack, mostly because of excellent coverage of the Russia-Ukrainian war. They've been very good. I mean, puts out tremendous articles. I think it's only 40 or 50 bucks a year to subscribe. Very in-depth articles. Doesn't mean I agree with everything that he says or he or whoever it is says, but well informed and have been fairly spot on their analysis. So this is a little bit of their review from their recent article. So a couple snippets. The story of this summit seemed to revolve more around precisely that, perceptions and symbolism as a powerful message in their own right, as opposed to overt actions. No real overt changes were taken on this summit. New members were not yet inducted, nor a major BRICS currency change announced. This was something that a lot of people were anticipating. Oh, we're going to have this BRICS currency. It's going to dethrone the dollar. Even uh, President Putin spoke to this, and this is what they say about the BRIC single currency. This is um, Mr. Putin talking. A BRIC single currency, quote, not being considered yet. This issue is not ripe yet. De-dollarization, Putin stresses, proceeding step by step. Quote, we're taking individual steps one after another. As regards finance, we did not drop the dollar. The dollar is the universal currency, but it wasn't us. We were banned and barred from using it. And now 90% of all the external trade of Russia is denominated in national currencies. They did it themselves with their own hands. They thought we would collapse, unquote. Well, we know that didn't happen. And so now that it didn't happen, that was the play that was made by the West. It didn't work. Everybody saw that. Okay. And so that gives credibility to and gives people courage. Courage breeds more courage. And so when it didn't work and Russia has basically thrived, they've had to continue to raise rates because the economy there is overheating. They're in a wartime economy. They have labor shortages there also. And so, you're going to have inflation. War is inflationary. So they just raised rates there. So again, and so yeah, I mean, this move away from the dollar is going to be multi-year, maybe even it's going to take years. It's not something, you have to remember something. You have to pay, these people that are in the BRICS right now or are asking to enter still have ties to the West. And so it's a balancing act. People are on the thing, being pulled each way. For example, India has security arrangements with the United States. Egypt, for example, gets $1 billion a year, or I think a couple $1 billion a year in USA. The UAE has a military base, a US military base there. Okay. And so, Turkey, for example, is a member of NATO. So what does that mean? So these things, if they decide to fully cut ties, there will be no going back, and they will be subjected to the ire of the United States and the Atlantis' hegemon, whatever power remains there, to try to punish them for doing that. So playing both sides of the fence is what they're doing. And so this process isn't just going to happen overnight. Again, we are seeing how the BRICS is leading to geopolitical positive outcomes. For example, China and India slowly but surely working through their border differences. Okay, this was facilitated by uh, being part of this BRICS and having more and more contact in the context of something bigger than just this little border conflict. The same thing can be said about the historic um, negotiations that took place and I wouldn't say a reconciliation, but a rapprochement of between Iran and Saudi Arabia. Okay, so this is what we're seeing. This is the beginning stages. This is going to take longer. So people that say, well, they're going to have this BRICS currency. I mean, there's a lot of differences here. You saw what's happened in the EU when you had countries that probably shouldn't have been in a mon. Greece is a lot different than Germany. Well, Germany is now heading down the hole, but you get my point. The Netherlands, Germany, France, these were big powerhouse countries, Italy, and then you had smaller countries entering that don't necessarily uh, get the net benefit. Yes, the single currency and lower rates, but just the factors of different types of economies and making this work so it doesn't turn into a situation uh, of what happened with the EU. And they talk about this. It says the challenge for a unified BRICS currency that, quote, requires thorough economic integration, apart from high level of integration among BRICS members, the introduction of a single BRICS currency would involve comparable monetary quality and volume. Otherwise, we will face even bigger issues than those that occurred in the EU, unquote. Putin recalled that when the euro was introduced in the EU, their economies were neither comparable nor equal. That's exactly right. So learning from others' mistakes before you just rush into something. Okay, so or maybe a lot of people say, well, they're just never going to do it. I don't know. This may never happen, but there's slow incremental steps towards it. I think the final blurb that I want to get across is the BRICS' strongest achievement is sending a message of acceptance, compromise, openness, civility, and cooperation. The true definition of anti-illiberal qualities, the same the West so adamantly claims it champions. So, for example, they let Maduro speak there. Whether or not you think he's the legitimate president there after the recent elections, he did get to speak there. He would never be allowed to speak at the United Nations, or if he did, in that context that he did at the BRICS summit. So people could say, well, all of these countries um, are evil countries, bad countries. That very well will be the case. I don't know. I don't know the hearts of all these people. Um, the fact remains that they are beginning to unify around this idea of creating another block that is able to resist and the initial discussions around mutual benefits, fairness, cooperation, compromise, acceptance, openness, instead of this what we have now, which is a Atlanticist. U.S. basically has these institutions like the World Bank, the IMF, the United Nations that it basically controls so it can ram down what it wants on everybody else. That's how a lot of these other countries view these institutions. And so there is a desire to create institutions that have qualities around being open, accepting with civility and cooperation for mutual benefit instead of just having the benefit go to a small minority. So this is the 13 partner countries that were preparing for membership. They were granted partner status, and you can see who they are: Turkey, Kazakhstan, Uzbekistan, Algeria, Belarusia, Bolivia, Cuba, Indonesia, Malaysia, Nigeria, Thailand, Uganda, Vietnam. So yeah, there's some sketchy countries in there, but there's legitimate countries in there with legitimate economies that are growing and that have more influence. I mean, for example, I mean, Turkey's not a joke. It's a member of NATO. What's going to happen if they become a full member of BRICS? Does NATO kick them out? They probably have to. What's that going to do for NATO? I mean, Turkey, I think, has the largest standing army in NATO besides the United States. Indonesia has 200 million people. Nigeria is 200 something million people. I mean, Thailand, Vietnam is on the up and coming. So, yeah, you've got Cuba in there. You've got, um, Uganda in there. Okay. You could say these are basket cases. Belarus is kind of a small country. Bolivia is kind of a basket case. Cuba, but this is what we're seeing. And as these countries join, there'll be additional countries wanting to join as they see the benefits and as they, if they in fact are able to continue. There is some move to create this BRICS kind of development bank, this BRICS grain exchange, which Mr. Putin said would eventually evolve, hopefully, into a full like commodities exchange, if you will. So there's incremental steps towards these things. But again, if people were expecting the announcement of a gold-backed currency or whatever to rival the dollar, I think that's several years down the road if it ever happens. So I think part of the thing to keep in mind is, the BRICS countries continue to build gold holdings. Here's the United States in red. That doesn't increase its gold holdings, 8,000 tons. But you see, here's the BRICS nations, here's the BRICS 10, here's BRICS and friends. So basically, um, more and more of these countries are increasing their gold holdings over time. And something to keep in mind. This is why I think a lot of people think that gold will be part of some kind of currency system or settlement system. I don't know, but I do think that gold will be getting remonetized to a certain extent going forward. So here's the GMO 7-year asset forecast, end of September. I'd like to show this again, showing that the value really is in emerging markets. Um, I've taken that to heed in the portfolio. We obviously we're open to investing. Our mandate is to invest anywhere that there's value. But you see, even like uh, U.S. is so overvalued now relative to foreign markets, in particular the emerging markets, value markets. But there's other places too, like some European countries, I think, offer value if they can get their act together. But it will require some political change that I think isn't particularly ready to happen yet. Again, we just show this for informational purposes. Doesn't necessarily mean we agree. Obviously, with the U.S. stock market making more and more new highs, it becomes increasingly overvalued. And if you buy things when they're overvalued, your returns over the longer term tend to be lower, not higher. So I wanted to point this out. This was a tweet. Says U.S. food is so toxic that the French and Germans smoke at 2 times our rate and still outlive us. So I'm not saying that, it's just because of the food, but this is another reason why I am uh, a little bit optimistic on Mr. Trump. If he actually, the people that he surrounded himself this time are people I think that have admirable qualities, and I share their views. Mr. Kennedy is a big advocate for health. Um, Notwithstanding, I'm not going to get into his vaccine issues, but he is right about the food being toxic here. There's many, many examples of things that are allowed to be put into our food here in the United States that are banned in Europe. I think that's low-hanging fruit, but that's going to be an uphill battle, right? Because these big, large agribusinesses, these food processing companies, I mean, this is terrible. I mean, who actually serves their kid Apple Jacks or Lucky Charms for breakfast? This is crazy. And I just look at people's carts when I'm in the grocery store. I try to stick to the view of buying everything on the outside of the aisles, right? So you're talking about fresh fruits and vegetables, meats, things of that nature, and staying away as much as you can from these, basically processed foods and seed oils and these things. I think it's demonstrably the case has been made that, you know, these things are poisonous and something's not right. Well, we have the obesity rates we have in the US and we don't see in other parts of the world. And then we look at what's in these foods. And so I thought it was interesting, that even with smoking rates where they're at, um, you still have people in Europe outliving people in the US. Well, there's other factors involved. It's not just because of the food, lack of exercise, and some other environmental factors. I think disparity in class here too. Some people just are not doing a lot of preventive medicine, preventive things that they could be doing. Like you should go get your blood work done and stuff like that for early detection of problems, but a lot of people can't afford to do that so they just don't do it. So I think there's a lot of factors that go into it, but I just thought this was an interesting example. Okay, we're getting close to the election. I don't really have an opinion. It appears that you know, just based on betting markets and the way the polls are shifting, that Mr. Trump has a very good chance of being reelected, notwithstanding the fact that I do have a view that there will be cheating. They've already identified some issues where some ballot stuffing and some shenanigans, but this happens every election cycle. Do I think it would happen to the level that I think it happened in 2020? No. And this person that the Democrats put up is just a terrible candidate. So we'll see what happens, but I think it does. It will affect the markets. We'll analyze it as it comes through, and it does matter. People say, "Well, why talk about this stuff?" Well, it does matter because policy matters. These people enact policies depending on what the constitution of the Senate and House are. That's kind of what I'm more interested in, actually, at this point. That doesn't get a lot of discussion. Where the Senate races, how's the House of Representatives going to fall? Because if you have a situation where you have either candidate in power wins the presidency, and then they have a Congress that's of the other party, that's probably the best scenario for everyone because nothing's really going to happen. So if you're in a situation where one party wins the presidency and control of Congress, that's when you can really see some stuff happen one way or the other that can really directly affect things around taxation and regulation and things of that. I mean, some of the claims that Mr. Trump's making, I do like the fact that he's surrounding himself with a lot of people that are, in my mind, very interesting people. Elon Musk championing a government efficiency. How much could you really do remains to be seen. Again, I'm very skeptical of what can really do as Steve Bannon says, disassemble the administrative state. I'm not sure how effective what you can really do in 4 years. Again, you only really have a year and a half because then you have midterm elections. So we'll have to see what happens. But again, I think that right now, I don't see anybody talking about the main issues that are going to affect a lot of these investments, which is around the debt and the ability to service it and the historical narrative that ultimately you end up with higher inflation as a way to try to keep the game going. So that's it for this week. Appreciate everybody stopping by. We'll talk to you next week. Thank you.